Hey everyone, welcome back to Fiscal Voyage. In this video, we're going to talk about 7 stocks that I am looking to buy this week on my payday. And these 7 stocks are stocks that I currently own, and most of them, all of them are probably down no more than 10%. So I'm looking to add more shares. They already were undervalued, and now they're just becoming more undervalued. And we're gonna go over these 7 stocks pretty fast, and we're gonna go over the fundamentals and technically. So first one I'm looking to buy more of is Merck. I bought shares of this stock around the same price and looking to buy more. And you can see here, if we max this out, the company has been growing earnings at around 6% annual compounded. They had a bad year in 2023, but picked up very nicely at 413% in 2024. And analysts are expecting almost double-digit growth for the next 2 years or so. You can see here on the fast graph, and you can see the price is under the normal multiple of 15. Currently, the company has a blended P of 13 with a nice dividend yield and a growing dividend yield of 3.21. And overall, I like it a lot. I want to buy more shares. If it continues at a normal multiple of 15, we could have a 20% annual rate of return for the next few years. So I like that a lot. You can see here the stock's been undervalued for the most part since 2020. It just had this bad earning year, but overall they're expected to bounce back very nicely in 2024 once they report their fiscal 2024. The next stock that I'm looking to buy is Pepsi. If we go here, Pepsi, and Pepsi is another one. It's not undervalued in the sense of the normal multiple of 15, but undervalued on a historical sense with a normal multiple of 20.9. And we get a multiple right now around 17.8 under 18. And you can see there's been very little opportunities to buy this stock under a blended PE of 18. You can see here in 2018 and after the financial crisis when it had a blended PE around 15 or 16. This is high quality stock. Earnings to continue to expect to grow 6-7% for the next few years. The dividends very well covered with a payout ratio of around 60%, 65%. S&P credit rating of A+. The long-term debt to cap is pretty high, but still manageable because of the credit rating and long history of profitability. Almost a dividend of 4%, and earnings yield almost 6% on a high quality company. So I'm looking to buy more shares of this stock. I think I'm down around 5 or 6%. I'm looking to buy more shares at this current price. Maybe one more lot, and we're gonna look at these stocks technically as well. The next stock I want to look at is MDLZ. Ticker symbol MDLZ. And there's another one, high quality, triple B credit rating, packaging food and meats. And you can see here if we max this out, has a blended PE around 22 or no multiple of 22. And right now we get a multiple of under 17, which is undervalued based on historic norm. You can see the dividend is very well covered, around 57% payout ratio. They expected a down year in 2025 at -3%, but picking up very nicely in 2026 and 2027. You can see here the stock's been crashing since $75 since September, and now is at 58. So that's a great buying opportunity to buy more shares. I'm looking to buy more shares of this stock as well. The next one is another packaging food. General Mills, you can see here, dividend yield of 4%, earnings yield of 7%, more than 7%, has been growing earnings over 4.31% over the past 13 or around 12, 11 years. Earnings are expected to be kind of flat this year, but picking up nicely in the following years. And you can see here, revert back to a normal multiple of 17, we could have another 20% annual rate of return for the next few years while we're collecting a nice dividend yield. The next stock I'm looking to buy is GIS, General Mills, which is the next stock I'm looking to buy is ADM. Oh, let's select the wrong one, ADM. And you can see here the stock is very undervalued, multiple of 10, and it has a normal multiple of 14 and a nice dividend yield of 4%. So you can see here earnings are expected to be kind of flat for 2025, down for this year or last year 2024 once they report earnings, but it should be picking up nicely in 2026. So we go to forecasting and long-term growth. You can see here they have only one analyst expecting negative earnings growth, kind of flat, but this stock is cyclical, so it has this ups and down. So I'm kind of expecting kind of the same thing, and this is why I want to buy more shares of this company. And the next one is in the medical field, MDT. This one looks fairly valued. I own shares. I'm down maybe 2% or so, but it has a nice earnings yield of almost 7%, dividend yield of 3.5%, growing dividend, low payout ratio of 51%, low long-term debt to cap, S&P credit rating of A. So all looks good. If it revert back to a normal multiple of 17, we could have an 18-19% annual rate of return for the next few years with this stock. And the next stock I'm looking, the last one, Merck, which we saw that one, and the last stock that I'm going to look at is PPG. This one here also looks to be undervalued, and earnings are expected to grow in the high single digit for the next few years. So you can see here, even if it stays at a multiple of 15, we could have a 13% annual rate of return. But if it doesn't, and it stays at a multiple around 20, we could have a 25% annual rate of return, which I like a lot. And now we go to the technical. First, we're gonna look at Pepsi. And on Pepsi, we're gonna look at the monthly chart. And the thing with Pepsi right now is right at this support zone right here. This was resistance, and now it becomes support. So this is a great area to buy more shares. This is why I'm looking to buy more shares of Pepsi at this current price. But it does have room to go to $100. You can see here, it was this trend, moving average was very strong. Bounce here, bounce here, bounce here, bounce here, bounce, bounce, and now it broke it. So it could crash if there's a whole, stock market crash or whatnot. It could bring the stock down to close to $100. Which I would definitely be buying more shares. The next stock I want to look at is MDLZ. This one also broke this moving average and is right at this support area. It could get low as $55. I will be buying more shares at 55, but I think it's a good time to be buying more shares. You can see here on the monthly, red, 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 red. We got another red here. So we could get one more red, which brings us to that $55, which brings us to that 2022 low over here around $55. It was strong support area. But as you can see in fast graph, or saw in fast graph, it wasn't as undervalued as some of the other ones, but it's a good undervalued based on normal multiple, and it's such a high quality company. And the next one I want to look at is GIS. This one here, you can see here it bounced. It has potential to go down to $50, which would be a great buying opportunity. You can saw in fast graph, it was doing pretty well in earnings, and you can see here it broke this bear flag right here, so it could have the potential to go further lower. $55 here looks like a good opportunity here because of this area right here was resistance, then became support. So this $55 area looks like a good buying opportunity, but we don't know. Right now it looks undervalued based on the fast graph, and that's why I want to buy more shares. The next stock, ADM, it has potential to go to $44, $45. You can see here this was a nice sell setup. The moving average used it as a resistance, and it's bringing the stock lower. But as you can see here, this area, $50 area, strong support. You can see basically from here to here, this whole area is strong support, some strong buying opportunities. So that's why I want to buy more shares of this stock, and it could get low as $45, so I'm okay with that. The next one, PPG, right here, strong support in this area. If we go here like this, boom, right here, resistance, a little fake out during COVID, then becomes support. So that's kind of why I want to buy more shares at this level right now. Looks like a good support area. It did broke these moving average, but we have strong support at this area, so that's why I want to buy more shares. It's undervalued, as we saw in fast graph, and it looks good overall. Next one, MDT looks like kind of like a head and shoulder pattern. You can see here's the shoulder here, the head, the shoulder here, and then right now we got this pullback, so a potential bounce. It was undervalued, and what we can see here is near this $75 or so range, $77. So it looks like a good buying opportunity to buy more shares. It's undervalued and it looks good overall as well. And the last one, MRK. You can see here right at the moving average, it respected here, and kind of respecting it here now. Earnings expected to continue to grow, so I'm looking to buy more shares. So this is why I think now these are good buying opportunities, and I'm kind of stuck. Which one do I buy this week? Out of the 6, I may just split and buy 2 of them, Pepsi and maybe Merck. But we'll see what happens, and I'll make a video on my next purchase. So make sure to hit that subscribe button if you're new to the channel, and hit that like button for more videos like this. And thank you for watching. I'll see you guys in the next one.